Hello everyone, it's Red with RedDragonLeo.com, and today is Thursday, the 24th of February 2011. Looks like we've had 3 down days in a row. Woohoo! Bears, let's get excited. In the past, as we have clearly seen here, that they would trick us out. We'd only put 1 down day, then they'd recover, and I think that's what I was expecting here as well. I wasn't sure this was the real thing or not, so I was hesitant after that big sell-off that it didn't bounce. I was surprised. Now the fact that we went down 3 days in a row, this tells me that this thing is going to definitely change its trend, and the likelihood of a new high, I think, is much slimmer now. As you can see, this is rolling over. Whether or not this three days down will turn into this pattern here, where you got 1, 2, let's say it was an up day, but 1, 2, 3, 4, 5, 6, 7, 8, maybe 8 days down or something before it bottomed out. I definitely think we're going to get to at least that, if not more. I think this is more of a major term because the weekly is also rolling over. Whereas you look in this November time period, on the weeklies, I don't think it was rolling over like that. No, it wasn't. You see it right there. It went down like that, but look at how high up it was. It just barely went down like that. Then it went back up. We are now getting close to the 0 mark right here on the weeklies, which is a much stronger point. When it gets down here to close to 0 and it's up high from this high level, as opposed to back here, it was still moving up. So as you can see, it was still moving up, and it was up on the MACDs. It was still quite high, and it rolled over. So you want the MACDs to be getting close to 0. I'm sorry, the histogram bars. You want the histogram bars to get close to 0, and the MACDs to be up at a high level like this 50 level, so it has plenty of room to fall. Whereas that wasn't the case in November, when the MACDs were up here pretty high, up here at positive 10, and let me get that right. The histogram bars were up at positive 10 area, as you can see, and the MACDs were still pointing up. They were not over bullish. They were maybe at 25 or something, somewhere in that area for this sell-off right here. So that makes that one a much different sell-off than what we're seeing right now. What we're seeing right now, I believe, is the real deal, and it will surpass this 8 days here. I think it definitely will surpass it. Now, that does not mean we can't get bounces in the way, of course, but I just don't think that it's going to go back up here and put in another high anytime soon. So, unless it really shocks me, I don't think that we're going to go up there to that 135.14 print on the SPY. I just don't see it at this point. This thing looks really, with the weekly backing it up, ready to roll over, and the daily wanting to roll over, I just don't see it. Because you look at it back here again, and yeah, the dailies went down and they went negative on the histogram bars, and then they curled back up, and that was mainly because the weekly was still pushing up on it, giving it some support. But now that we're getting ready to go down, you might think, well, okay, we'll just get the same kind of pattern, a bunch of lower histogram towers for 8 or 9 days. I don't think that's going to be the case, because the weekly is much weaker now, and it should roll over and push this thing much deeper. This should go much deeper this time. So I don't think it's going to roll back up after 8 days. I just don't see that. So while tomorrow I am expecting a relief rally of some sort, I don't know how high it's going to go. Maybe it goes up here to 1320 area or something. Maybe as high as that right there. That is 1326 on the 10-day moving average and 1315 on the 20-day moving average. But I don't really think that's going to be the case if it gets up that high or not. I don't know how high it's going to get, but it might. It might just hit that 20-day moving average and then roll back over it. So, and also it's going to have to line up with this here trend line. a back test of this trend line. That's what I've kind of been looking for, is a back test of this trend line. So if we get a move up and make it up here to this 1320 area, then that again is going to be about where I seen that print of 132.85, I think 132.85. That might be a little bit too much. I don't know if it's going to go that high or not. That is 132. I'm looking at back up here. Yeah, 132.85. That print. Okay, that would be 132.85. So that would be up here somewhere. That would be piercing it, because it would be more than 1320. It would be more like 1328, roughly. I'm just, because trying to correlate the SPY and the SPX, they're not always exact match. Okay, so so just because the SPY would be 132.85 does not make this 1328.50. It doesn't. It's not an exact match like that. Okay. So it very well on the SPX could simply go up here, hit this back test 1320 area, and maybe that's enough to get up there, because we don't know for sure that those fake prints, when they're going to hit, and if they're not thrown out there to mislead us, because I'm sure a lot of these prints are not real fake prints that we're looking for. Cobra's got it going here on his chart, seeing what he's doing. He's thinking it's going to go down and back up, and I don't know. I don't know if we're going to go back up or not. That's a possibility, I guess. So down and back up like that, that's certainly possible. Depends, I guess, on what the news is in the morning. If those GDP numbers are bad, we could go back down here and retest that bottom again. If it holds, then yeah, we'll probably go back up, because triple bottoms are rare. So if it hits again and it doesn't tank and get pierced through that bottom, then yeah. Well, what am I saying? Wait a minute. We already pierced it. I'm sorry. We don't have a double bottom anymore. That was here and here. Okay, so it would be a double bottom at this point, because we did go lower. That double bottom failed. I wasn't thinking straight. Sorry, gang. So yeah, so it can go down there, hit a double bottom, and then go back up. That's a possibility. That's a possibility. Or it can simply go up. The 60-minute charts are lining up, and I think they're ready to go up at this point. When you look at this right here, this 60-minute chart, I definitely think it's wanting to go up. So it will kind of depend upon the news in the morning, how the market reacts with these GDP numbers. If they're just, in line with expectations, then possibly it does do that and sells back off a little bit. It doesn't get too excited. But if the numbers are good, then maybe it goes up first and then comes back down. So either way, I'm looking for a back test probably close to this trend line right here. And I've been saying it for a while, but it's taken a while for the charts to line up. So I'm looking for this to get up here and get overbought either early in the morning or late in the afternoon. I don't know when. And then to roll over and to put in another leg down, especially if the price does not get up here above this 1320 area too much and hits that trend line and backs off from it. It's going to be about the same thing here. You can see the same trend line, go up here, back test it, hit it, and then roll over. And on a Fibonacci level, I guess we have went down, that's about 50 points. So if we go up 25 points from here, that's about 1320, roughly speaking. So that would make sense as well. And here we are looking at negative 5.0, so we do need this to go up here. Does not have to go into positive territory, because the market is rolling over, so we kind of expect it to kind of stay down here or barely breaking above zero, because the trend has changed. Just like all this uptrend, it stayed above the zero mark and will just dip down, dip down. We expect this to stay down below here now that the trend has changed, and occasionally peak up above it. And that's the difference. So if the trend has truly changed, and I do believe it has changed. So again, we look at this and what do we see? Well, right there, that gap. Now that is probably about that print I was talking about, 132.85. Because look where that's at. It's right at 13.26 or something. So if they decide to go up there and fill that gap, that's really stretched. That's probably more like a 68 or 61.8% fib level, somewhere in that range. I'm leaning more towards the 50% retracement level for this wave 2. So what could happen again is, instead of it just going up right off the bat, the GDP numbers come out bad. It sells off a little bit right here, puts in a right shoulder on an inverted head and shoulders. Okay, so here's your left shoulder, here's your head, here's a speculative right shoulder. So it goes down in the morning off of those bad GDP numbers, and it does not go lower than this, and it just puts in a right shoulder. Then it goes up and breaks out and puts in a positive day at the end of the day, and closes positive. Now, what would that leave for next week? It could leave. It could have Monday being a wave 3 down, the start of a wave 3 down. There's no way of knowing that for sure. But if this was a simple wave A up, and we did have a wave B down, and then we went up for a wave C to complete the day and end Friday, a 1, 2, 3 ABC, and this one here is a 1, 2, 3, 4, 5. So this now looks like a pretty 5 waves down to me, and it didn't before. You know, when we was trying to count this, when we were in this area here, and I wasn't sure whether or not we'd bottomed or not, it didn't quite look like a legitimate 5-way pattern. But see, this move from here to here looks pretty similar to this move from here to here. They're pretty close. And I think that's what they're supposed to be. 1 and 5 are sometimes similar. 3 is usually your longest wave. But again, now don't quote me on this, because I'm not an Elliott wave person. This is just what I've learned from other people, other Elliott wave stuff. I'm more into obviously the support and resistance levels thrown in there with the manipulation of the market, along with some fake prints, and we don't know how valid they are anymore, because they know that we know about them. They know that we know, so they're going to put out some fake prints, and I think that's what we're getting here lately. So, but anyway, you look at this. If it does do that, that would be, if we have a 5 waves down, and then this starts A, B, C, like I've been saying, this A down would, or I'm sorry, A up already completed, B down. The B down would put in the right shoulder here of this inverted head and shoulders, which would justify a move up, and that would take it up probably to, well, I would say, let's see, what is it, roughly, was that 15 points from here to there? I think that's what it is, 15 points. 15 points on top of that is, what about 25, 13.25? So, that's possible. So we have to look out for that. It very well could happen on a Friday. Now, if that happens, and this thing kind of goes down, back up, because obviously it's going to go down if it rolls down here to put in the B wave. So if it kind of rolls down and rolls back up, even if it doesn't go below 0, if it just kind of goes down here a little bit and then kind of makes these lower humps, and it works its way up here into positive territory on the 15, and then it does the similar thing here with the 30, works its way up here close to the 0 mark again, and maybe goes down and puts in some lower towers, but stays above the 0, but by the end of the day being massively overbought, then and then we'd want the same thing, the 60, to go up here and get ready to roll over. Just kind of go up here and maybe get up here to 1 or something like that. I don't know how high it's going to get. I don't see it being too high. And then work its way up here to maybe, I'm guessing, probably negative 2.5 to ready to roll over as well. This would set up a perfect scenario for a nice, beautiful wave 3 down on Monday. Now, there's, of course, no guarantee that it just doesn't open up Monday, the usual bullish Monday, and keep on going. But I think the trend has changed. And if we have this scenario happen out tomorrow and we have a positive close, it could very well be just like this day over here where we had similar to here, right here. If we're looking at this area right here, we had 2 down days and then 2 up days. Okay, well, let's throw out this third or this day right here and make it a down day. And we'll call it 3 down days just like we've had today. And we have 1 up day tomorrow. And then Monday we would have a wave 3 down. We might not even have that wave or this day right here. Because remember, these they don't work out exactly. They have to change it up. They can't possibly work out exactly the way they are, these patterns are, but they're going to be similar. So we see the down move, the up move, and then finally the down move, the big wave 3. And that's what this was. So that's kind of what I'm looking for. So I think we've had 1, 2, 3 days down. I think we're here. Only in this case. So, looking over here, we have 1, 2, 3 days down. So tomorrow I'm looking for that up day, that positive day. And then Monday, I'll be looking for that down day. And we might not have that up day on Tuesday. It might just go down all week on Monday afterwards. So we don't know. But I can tell you this, I will be looking for a short entry. So especially if we only go up 50%. Now, obviously, if we go up here and rally and take out this current high, then I ain't going short. But I don't think that's going to happen. They had every opportunity today with that extra POMO money in there on Thursday that the Zero Hedge posted. So they didn't rally. And if that's all they can do, then we know that the people that are controlling this market want it to tank. So they did not use that POMO money, or if they did use it, this is all they got. So regardless, that tells me they're ready for it to tank. But they should have an up day tomorrow, I believe, and that would set up Monday for another big leg down like this, only it should last all week long, I believe is what's going to happen. Looking at it on a weekly chart, this would look very, very similar to this right here. Very similar. Only, you see where that topping tail was on that one? That was probably where they closed down here on the week before on a Friday, and then they popped up on a Monday and then sold off the rest of the week. Whereas we will possibly close up a little bit to make this about halfway point. Is what I'm looking for. Obviously right now the red bar is covering about 3/4 of that entire bar there. It's red 3/4 of it. So I'm thinking it's going to be about 50%. So if we move up tomorrow and close up, it'll be about 50%. And then Monday I would think that we would open up and just tank the whole week. It's what I'm seeing in the charts. And it's also a feel for the market as well, that I think that with all that POMO money, if they wanted to keep the market up, they would have rallied it today, and they did not do it. That tells me they're ready for it to tank. But on a technical basis, we need a bounce. That's the bottom line. And the charts are oversold. They are pointing up for tomorrow. So while it's possible that we get what Cobra is suggesting here with this low here, I don't think it's going to go to a double bottom, but that's possible. I think it's going to be a higher low and then a ramp up. So, he's speculating just like I am. Either one of us can be right. But once the market opens tomorrow and the GDP numbers is bad, if it does go down and that double bottom holds, it's probably a buying opportunity for a wave up. But I won't be going long. I'm not going to get short. So, best of luck on that. And the VIX here too, same thing. You kind of need a little pause day on the VIX. Another back down a little bit. My goodness, it's just crazy there how far that's stretched out. So, and then the same thing here. It is getting pretty oversold. What happened to it? Let it go. Well, I wonder what happened. I missed it. All right, Cobra, you turkey, you moved your chart on me. All right, I hit the refresh key and he moved the chart. Well, that's okay. Anyway, you guys get the picture. I think that we are definitely, the trend is definitely changed. This thing is looking ready to roll over. And here on a monthly chart, ooh, look what happened when I refreshed the page right there. You didn't get that, just, you know, go back a little bit, because you would have seen right here that this was solid all the way up before on the month, and now it's putting in a nice topping tail. And the month is getting ready to be over here in a few days. Well, not a few days, but a week, less than a week. So that's a sign, a topping tail on the monthly. Look what comes next. Bam, bam, bam. Looky there, looky there. Bam, bam, bam. So that's nasty looking. All right, guys, that is it. And I will remind everyone again, I will put the link up there for Anna's room, that when she's going to do this this seminar that's going to be free. Not really a seminar, it's just going to be, you're all going to be invited to a chat room, and she's just going to go over options and stuff, and that's and teach people. And you can learn a lot from this girl, because she studied it and took the courses on it, and I haven't. So I mean, I've learned from her on how to do these options, and I can still learn more. I'm just, you know, we're just different traders. You know, I'm the red pill taker guy, and she's the I'll taste the red pill, but I won't swallow it. So she's not a blue pill taker. She's very wise on it. She knows the corruption in the system, but she hasn't swallowed the red pill yet. I don't think so. Okay, guys, that is it. Good luck tomorrow, and let's hope that everyone can get a chance to get short again at a 50% retracement tomorrow. Maybe at the close of the day. If that's the case, I'll probably go short over the weekend and cross my fingers. Good luck, gang.